G'day internet land. This is the first time many of you have been inflicted by this mug on the interweb, so I apologise for that. But I want to take this opportunity to have a chat to you and hopefully everyone you know and everyone they know. Because this week there's been some significant stuff in the media about this thing called a Royal Commission. Now most of us know what led us to the Royal Commission. A bunch of bankers doing some dodgy stuff, some real dodgy stuff. They committed fraud, they stole, they cheated, they lied, they colluded to rip off average Australians. They chose to enrich themselves while destroying other people's lives. So we had a Royal Commission. The Royal Commissioner handed down his findings on Monday, and lo and behold, the biggest whack from his big Royal Commission stick was not the banks. In fact, the first hour of trade the next day, all of the major banks added several $1 billion to their share price after it was realised that the Hayne Royal Commission report actually hit them with what Alan Kohler calls a wet lettuce. And this is where it gets interesting for you, because the biggest hit will be mortgage brokers. And when I say hit, it's not a hit. It's a genocide. Mortgage brokers, in maybe 12 months' time, depending upon who gets government, will cease to exist. You might have an opinion on that. You might not. It doesn't matter, because I don't want to talk to you about that. I want to talk to you about what it means for you. The mortgage broking industry has been pretty bad at trying to detail the impacts of what this will be. They spend a lot of time talking about themselves, a lot of time talking about how they get paid and how good that is. It's like a politician trying to advocate for a pay rise. No one gives a crap. And neither should you, really. But the outcome and the result of what the Royal Commission report will deliver is something that every Australian should be aware of, because it will affect you. Most people I meet have a mortgage, or they want one. Every person that has a mortgage currently, or that wants a mortgage in the future, will be affected by these changes. The changes mean that the banks will no longer pay mortgage brokers. They will no longer take out of their pockets to pay the people that are helping you. No. What they'll do is they'll keep that money. You will have to pay that with an upfront fee. I've mentioned Alan Kohler. He's the ABC finance reporter. A few days ago on the news, he showed us this graphic. This is the amount of money the banks will save, make, by just keeping on to mortgage broking commissions. Just is the important word, because this is where it gets quite interesting for everyone. So the upfront fee that everyone's been talking about, it's not just for brokers. In fact, the Royal Commission and all industry have already acknowledged this, that the upfront fee will be for everything, whether you go to a mortgage broker or whether you go direct to a bank. That is to keep it a level playing field. So establishment fees and application fees that were abolished pretty much years ago have come back, and they'll come back with a vengeance. The average mortgage broker will earn $6,000 on a mortgage over 3-4 year period. That's of course their upfront commission and their trail commission. Now if you're being realistic, you're going to have to make sure that those mortgage brokers can continue to make the same income or have the opportunity to make the same income when the changes come in. So the establishment fee for a mortgage, that's not going to be $600. It's going to be closer to $5,000 or $6,000, because that's the only way you'll be able to maintain a mortgage broking industry, if there is one, which there won't be. So why is that important to you? Well, clearly you're going to be paying thousands upon thousands upon thousands of dollars more for your mortgage. Now, some people out there just might be accepting that, and some have. I've seen on social media, for some reason, they hate mortgage brokers and they're quite happy to pay thousands upon thousands more. The reality is you won't be paying it in cash. The reality is it'll be added to your loan, like mortgage insurance. That's a video for another time. But those who have paid mortgage insurance I'm talking to you, all you first home buyers. You know what that means. You are paying a large sum of money for no benefit that you foresee to assist someone else. Mortgage insurance, you're paying to insure the bank's risk. It's money you'll never see again. It's money that you also pay interest on. It's added to your loan. There's one specific downside to mortgage insurance. What it does to you when you're with a lender is it keeps you at that lender. If your lender puts your interest rate up, if you're on mortgage insurance, you're not going to be able to get a cheaper rate anywhere else because you've already paid mortgage insurance, which means if you take your home loan somewhere else, you'll be paying more mortgage insurance. You'll be refinancing the old mortgage insurance plus paying new mortgage insurance. So paying more interest upon more, borrowing stuff that has no material benefit to you other than getting you into a home. So first homeowners know this. People that pay mortgage insurance know this. Under this new regime, refinances, well, they'll be a thing of the past. Why? Because every single mortgage applicant will pay thousands of dollars in upfront costs to the bank and to you. Remember I mentioned before, the bank's already getting a kick out of keeping mortgage broker commissions. Well, they're also going to get your upfront fee if you go direct to them. Thank you very much. A nice backhander for institutions that have treated us like mugs for decades. Something's wrong there. But most importantly, what that means is that when you get a mortgage, you are locked into that provider, possibly for the life of the loan. The opportunity to shop around for a better interest rate will be gone. Right now, most lenders will charge you nothing for an application fee, and brokers, of course, charge you nothing. If your provider puts your interest rate up or they're not competitive, you simply pick up the phone to your broker, you pick up the phone to another bank, and you move your home loan. But of course, if moving that home loan means you've got to pay another $5,000, you're going to want to make sure that the interest rate cut that you're going to get by moving it to a new bank is going to be greater than the fee that you're paying. Let's crunch some numbers. If your interest rate is currently 3.75 and your bank, under this new regime, decides to up your interest rate, they can up your interest rate above 5% before it becomes affordable for you to shift your home loan. Just think about that for a second. Because you are locked into that lender, because that lender will know that the only way you can take your home loan somewhere else is by paying another fee. But if the savings aren't going to be $5,000, why are you going to move? You're not. And the lenders will know this. The only thing that will prevent them from keeping your interest rates low is their own generosity. Mortgage lenders right now give their best interest rates to new customers. That is a fact. Look it up. In fact, if you've got a mortgage right now with ABC Bank, you will be paying more than what that new customer tomorrow, when they get their home loan, they'll be getting a lower interest rate. That is a fact. So keep that in mind. When you are locked into that lender for life, because you have to pay $5,000 to go somewhere else, what is going to keep that bank from upping your interest rate? Nothing. Absolutely nothing. The regulators can't regulate it. The government can't regulate it. They can't. It's impossible. It would be a breach of the Corporations Act. You cannot regulate prices. And because every lender is different, every lender has different costs. So you cannot regulate interest rates. That's why banks put their interest rates up when the Reserve Bank keep them low. The Reserve Bank haven't changed interest rates for 30 odd months. But interest rates have gone up more than 10 times during that period. What was stopping them from doing that? Nothing. So if you're paying $5,000, if you're paying an upfront fee with every home loan you do going forward, get ready to be stuck with that lender for life. Get ready to be at the whim of that lender. Get ready to be ripped off. Because if there's one thing certain in this world, is that banks will take their opportunities to make as much money as they can, when they can, if they can. It doesn't matter who's in the way. They're big and they're powerful. We just had the biggest inquest into the banking and financial services sector ever in this country. And what's going to happen? They're going to make more money than they have in the past. Don't listen to the spin. You are going to pay more. You are going to be locked into your lender forever. If you've got a mortgage now, get ready to pay more because there is no opportunity for you to pay less. You, as the consumer, will be right royally screwed. And there is nothing that will stop it. Nothing at all. More information can be found below. My advice to you is if you have a mortgage or you want one, look into this. It's basic economics. It's basic fact. It's right there in plain sight. And no one is talking about it. Get ready to pay more. Get ready to get screwed by your bank again. They've won again.